Hello, very good Monday. Thank you so much for tuning in and for watching Smart 24 TV. Welcome back from Smart Means Business with Barije and Masi there. And of course, now it's time for financial markets. My name is Anthony. Coming up on the show, we want to look at what we are looking at, of course, this week in investment. Across the markets in the global trends, we are seeing that the United States this week is going to witness one of the busiest weeks in as far as release of financial statements for the second quarter. Amazon, Apple are some of the companies in line, of course, to give us a little bit about their performance and more details, of course, in their financial reports and statements for the second quarter. On the Uganda Stock Exchange, book closure dates are coming in and a couple of other things ahead of this week. Centum Investments is making losses, and what could be the cause and where is they forward? More and that is coming up on the show. But first, Altex East Africa is saying you can do something new with Altex now. Altex under Zabu initiative says you can buy treasury bonds across East Africa by simply dialing *292# and following the prompts. Also last week, something amazing happened at Altex. Safaricom got to list on the exchange, and Safaricom will be offering trading on Altex East Africa since the beginning of last week on the 25th of July 2023 with an initial offer of close to 1 million depository receipt units, starting off with a price of 61.45 Ugandan shillings per share or per unit, and that is about 614.53 Ugandan shillings per share. Altex East Africa, do something new. Now let's delve into the business of the stock exchange here in Uganda on Friday. Trade on the market seemed to be relatively better on Friday compared to the rest of the days in the week. However, the All Share Index, which is the benchmark performance indicator of the exchange, declined significantly due to the decline in the performance of the cross-listed stocks. In aggregate, 4 equities participated in trade, ending the day with disappointingly no gainer but 7 losers. All the 7 losers or the companies that lost 3 participants, and these were Stanbic Bank Uganda, who came in at the top of the participants list with a total volume of at least 846,908 shares, whereas the MTN Uganda stock at least had a 97,100 shares volume that was traded, and Cipla Quality Chemical Industries at least 45,700 shares. Umeme Limited also participated with 12,600 shares. Now, news coming in from the Uganda Stock Exchange continues to indicate an improvement in as far as the stock's performance and the stock prices are concerned in the second quarter of 2023. This is probably attributable to the high dividend yields on most of the stocks. Now, investors increased spending on company shares in the Uganda Securities Exchange in the second quarter, as well as in the first quarter slightly, in an effort to find safe havens from the faltering returns on equities with high dividend yields. The dividend yields in percentage on the stock's current price paid out as dividends to shareholders annually increased due to their high dividend yields of 17.7%, 17.5%, and 15.2% respectively. Stanbic Bank, Umeme, and National Insurance Corporation attracted the largest number of investors according to the stockbrokers in the second quarter. By close of Umeme's books on the 30th of June, the deadline for dividend consideration, the power distributors' share price had risen by at least 4.8% from 420 shillings before the dividend declaration notice was published on 19th of May to 440 Ugandan shillings. In the notice, Umeme said it would raise the dividend paid per ordinary share from at least 54.1 shillings in 2021 to close to 63.9 shillings in 2022. Since then, there has been a significant increase in the demand for the stock on the Uganda Securities Exchange, which has increased sales and ultimately reduced the share price due to the aggregate supply. The share price began declining on the 3rd of July 2023 from 440 shillings and followed the trend until 11th of July at 420 Ugandan shillings closing before leveling off at this price for over 9 days. Now, this decline followed the trading frenzy that preceded the close of Umeme's register on the 30th of June. During the period also, stock attracted a lot of investment following approval of a dividend payout of 36.1 billion Ugandan shillings, and this is at a 3.61 Ugandan shillings per share as of June 2nd. The stock price stood at 21 shillings then, and since then, the bank has registered at least an increase in price to 26 shillings on average. But before the bank's register closed on the 25th of June, just keeping track of what was happening, its share price had soared by over 23.8% to 26 Ugandan shillings before the book closure date. Funds that chase after absolute returns are hunting especially for stocks with high dividend yield, according to Mr. David Calvin Bateme, who is a Crested Capital head of research, noting that the recent gains had been fueled by buying from a wide range of investors, including local punters looking at the gains, and foreign investors, insurers, as well as banks' own investment funds. However, some counters, such as the British American Tobacco Uganda, did not realize significant activity during the period. For instance, British American Tobacco Uganda registered very low activity in the first and second quarter, announcing a dividend of 209 shillings per share, the highest at the Uganda Securities Exchange. But, like you know, British American Tobacco hasn't been active on the exchange, and the price is the highest as well at 15,000 shillings. So you can imagine someone buying shares at 15,000 and the dividend is at 209. Yes, much as it's the highest on the market, it is still not sufficient, at least for given the activity that the company is having. According to Mr. Bateme also, the British American Tobacco one wouldn't state that the counter is not trading because of dividends. The counter has been unattractive with a dividend yield of 1.39%, which is the smallest on the bourse. So, dear viewers, there are two things you need to look at when you're looking at dividends. Dividends are what is given to the shareholders at the end of a financial year or at the end of a quarter by a specific company as a reward for being investors in the company. Now, this dividend is always part of a profit. Always part of a profit. It's never part of a loss. When a company makes a loss, we don't expect dividends. And dividends are not rights to investors. In other words, it's not a must for a company to issue dividends. And it's within the listing rules, at least, for example. But the company could issue high dividends. For example, British American Tobacco Uganda at 209 shillings, the highest. But then comparing that with, for example, Stanbic Bank Uganda, that is issuing just 3 Ugandan shillings. 1, 2, 3 Ugandan shillings. Stanbic Bank has a higher dividend yield than British American Tobacco Uganda, much as British American Tobacco Uganda, or BATU, seems to be having a higher dividend. Now, why is that so? We compare, of course, the ratio between the current price and the dividend. So how much is this dividend costing? Because a dividend is given as per share. So if you have a share costing 15,000 shillings and returning 209 shillings, when you do the mathematics and you divide, you get about 1.39%. And then when you have a stock of 23 Ugandan shillings and you have a dividend of 3.61 shillings, let's see, how much is that? You have a stock price of 26 and then you have a dividend of 3.61. You divide that by 2. Now that's a yield of 13.8 or close to 14%, which is much higher. That's exactly what we are looking at here at, for example, stocks like British American Tobacco, giving us high dividends, but with very low yields. Because those yields count. It should be, the dividend should be in context. It's what you're buying versus what you're getting. What is the value you're getting back? So through the dealers or brokerage representation. The USE serves as a bridge between businesses in need of capital. If you're out there and you need capital, and investors, both foreign and local. And if you're out there and you need to invest in some of these companies, that is exactly the business of the Uganda Securities Exchange. However, the Uganda Securities Exchange has seen volatility over the past several years, with investors such as NSSF, the big investors such as NSSF, investing at least 2.3 trillion Ugandan shillings of its income, of its 17 trillion income in equities and securities, adjusted to put more money in investments that promise higher returns. For instance, in 2022, the National Social Security Fund, or NSSF, investments in real estate increased by at least 63.3 billion Ugandan shillings, to a tune of say that the fund has confidence in equities despite the volatility. And he continued to say that they have invested in the stock market, but equities tend to be very, very volatile. In a good year, you could have an upside of 30%, but in a bad year, you can have a downside of 20%. In the first quarter of 2023, the USE market capitalization fell by 5.4% and wiping out over 1.1 trillion Ugandan shillings in investors' wealth, according to the Capital Markets Authority quarterly bulletin. The drop was due to mainly share price losses on all the cross-listed counters. The CMA continued, of course, to add, noting that the losses were registered on a number of counters, including Centum, East African Breweries Limited, and Kenya Airways, KCB, MTN, Uganda Cranes, as well as DFCU. Losses registered on locally listed stocks stood at 200 billion Ugandan shillings during the period in which the market capitalization of the Uganda Cranes, for example, dropped by 12.8% and DFCU by 5.6%. And MTN at least 4.2. That's where we are standing at. The cross-listed stocks seem to be putting the stock exchange on the other side, and that's the losing side. But there's hope. There's hope, especially for now, the domestic listings that are doing well, like Stanbic Bank, like Umeme. There's a lot of hope. Now, it's still talking about cross listings. Centum Investments has made some significant losses, more than triple, to a tune of close to, close to 51 million US dollars. Now, Centum Investments suffered several losses during the financial year we have just concluded on the 31st of March 2023, from especially continued poor portfolio performance, especially due to its portfolio investments that have lost significantly, and that of its other key subsidiaries, including the Two River Development Limited. The regional investment firm is listed primarily on the Nairobi Securities Exchange and cross-listed on the Uganda Stock Exchange. It has seen a net loss rise to about 7.31 billion Kenyan shillings in the past year. That's about 51.47 million US dollars from 2.28 billion Kenyan shillings in 2021-2022, after years of massive debt-funded capital investments. Audited financial statements show that all the group's trading, investments and subsidiary operations, save for the real estate investments, posted either losses or reduced profits during the period, reducing the group's cash flow position by 11% to at least 2.9 billion Kenyan shillings or $20.42 million from 3.26 billion Kenyan shillings or close to 22.95 million US dollars. According to Mr. James Moria, who is the chairman, and I'll quote, he says that our focus remains to take the critical decisions that are necessary to continue creating value and generating enhanced cash flow in the dynamic and challenging operating environment that we are in. And he says that they are cautiously optimistic and look forward to an improved performance coming this year. But let's look at these losses seriously. First of all, the company posted a loss of 52.58 million Kenyan shillings, about 371,000 US dollars on the disposal investment properties, from a profit of 111 million Kenyan shillings or 782,000 US dollars, while losses from investment operation 1.39 billion Kenyan shillings. According to Two Rivers Development Limited, they booked a loss of 7.09 billion as well, and Centrum invested about 1.9 billion into this project. So every investment seems to be going sideways, except for the real estate. So far as the debt is concerned for Centrum, Centrum, first of all, in real estate, by the way, Centrum's real estate investments posted an increase in the profits by about 2.01 billion Kenyan shillings. That was the profit that was reduced during the financial year we've just concluded, from about 127.04 million Kenyan shillings. So far, the debt reduced to as low as 2.2 billion as well, from 116 billion Kenyan shillings in 2019. So in a bid to kind of curtail the losses, the Centrum investment stock has written off some of its investments, such as the 2 billion Kenyan shillings investment in the controversial Lamu-based coal-fired power plant. It also suffered 900 million Kenyan shillings impairment loss on its investment in Akira geothermal power project, a 140 megawatt plant under construction in Kenya's Nakuru County. Centrum is majority 30.94% owned by the state of the late by the estate of the late businessman Mr. Chris Kiribu and Kirubi, and that is the Kenya, and also the Kenya Development Corporation at a 22.97% stake. The company's board has approved a share buyback plan to purchase up to about 10% of its issued and paid up share capital to show up its shares value on the stock market in Kenya. That is the story of Centrum Investments, and things continue to be a little bit blur, but we are still making progress in as far as the company is concerned and recovery is concerned in the year 2023. Moving on, this week, of course, we await earnings from Apple, Amazon, and a couple of other stocks. That is the second quarter results for the year 2023. We await anxiously the jobs report, which all seem to be going the right direction as per the reports we are having. Now, reports from two of the world's largest corporations and the July jobs report will usher us into the new month as investors open their eyes to the new month. Quarterly reports from Apple and Amazon headline the week's earnings reports, while the July job reports also is set for release this Friday morning. Elsewhere on the schedule, key updates on activity in the manufacturing service sectors of the economy, as well as the latest read on the job openings, will highlight the economic calendar. On the earnings front, at least when you look at the earnings from the different stocks, We have results from the AMD, we have results from Starbucks, Pfizer, Uber, which will highlight a still busy schedule. Markets enter the month of August with economic data continuing to impress the investors, with a surprise acceleration in the United States economic growth in the second quarter and cooling inflation, sending stocks higher as the Federal Reserve raised interest rates to the highest level since 2001. The United States market rose last week with gains as upbeat results and forecast by Google, Meta platforms leading to gains on the high-tech NASDAQ index. And for the year, when you look at the year-to-date performance, NASDAQ has been nearly up by 37%, and when you look at the S&P 500, it has also been up by at least 15%, as well as the Dow Jones Industrial Average. So there's a lot to expect, really. The Dow Jones Industrial Average has been up by at least 7% over last week. There's a lot more to look out for this week. Please do check out our website at www.smart24tv for more information. And my name is Anthony. Once again, thank you so much for tuning in and for watching Smart 24 TV. That's it for our Monday edition of the Financial Markets. Catch you tomorrow, same time, same place. Bye for now.